Every investment you make, whether it's in the stock market, in residential real estate in your neighborhood, or in real estate syndications, carries some risk. A prudent investor must assess risk along with the rewards of investing. Returns must always be weighed against the risk of that particular investment. Hello, I'm Arn Cinedello with Spark Investment Group, and in this video I'm going to share about these risks and how we work hard to mitigate each and every one. Risk number one, this is the one that concerns the people the most. It's the risk of losing one's investment. You could invest $50,000, and if a bunch of things go wrong, hey, you could lose that money. That would be an awful experience, and while highly unlikely, it still needs to be acknowledged. However, here's how we mitigate that risk. One, we put in place an experienced team that's done this before and has a strong track record. Two, we buy an asset that's cash flowing right out of the gate, and we invest in growing markets. We use conservative underwriting that gives us a little bit of buffer in case things go wrong, and we always advise our investors to invest with cash and not take out a loan to do so. This is just a short list, but these are some of the things we do to help mitigate or curb risk number one, which is losing the investment. Now, risk number two is that budgets and timelines could prove to be inaccurate. The budgets and timelines are projected, which means they're an estimate based on the best available data, tempered by the operator's experience and market knowledge. Now let's be real, those numbers could be a little bit off. I think we have all heard of or experienced renovations that have gone wrong, costing more than expected or taking longer than expected. Unforeseen issues may arise. These can all absolutely happen. However, here's how we mitigate that risk. Again, I'm going to emphasize that we put in place experienced teams that have done this before and who do extensive due diligence before purchase. They actually go out, talk to the vendors, contractors, inspectors, and get quotes up front. They do a very detailed inspection, and they work very closely with experienced property management teams to take a look at the property and the business plan before purchasing the asset. Another thing we do is we raise all of the capital expenditures, called CapEx, up front. We don't rely on the cash flow to fund renovations. Risk number three, something that's on everyone's mind, is the risk of a recession or some sort of correction in the market, and those are also a very real risk. Let me tell you how we mitigate that risk. Again, an experienced team comes into play. You're always going to want a very strong team managing the asset, because if anything goes wrong with the renovations, a recession occurs with anything, that team is going to make the right decisions on behalf of your investment. The second thing we do is put in place a loan with a buffer. This essentially means that we work on the loan terms that have flexibility for us, allow us to hold an asset longer than projected if needed. All of the investments offered by Spark Investment Group use leverage properly and have adequate cash reserves. We want the security of knowing we have cash in the bank to use if needed. As an example, if we had a projected 5-year hold, but at that 5-year mark the market is soft, then hopefully we'll put in place a loan that has a 7 or 10-year term on it, so that we have flexibility to adjust to the market, and we can hold the asset a little bit longer until the time is right, until we can achieve the returns we've promised our investors. The third thing we do to mitigate risk associated with the market recession is cash flow. We always buy assets that are cash flowing right up front. If a recession happens, if we absolutely need to, we don't have to do the renovations. We can just hold the asset as is and know that it will continue to generate cash flow and cover expenses. All right, let's move to risk number 4. The fourth risk is that as a passive investor, you might feel like you're left in the dark. Has this crossed your mind? I mean, for me as a passive investor, this is even scarier than potentially losing my money, because I want to know what's going on with the property I've invested in. When I invest in a rental property, a single family house on my own, I know exactly what's going on. But when you're depending on a team to communicate that information to you, there is a risk there. What if they aren't open, honest, and transparent with you? This is absolutely a concerning risk, and again, here's how we mitigate. We go back to an experienced team with a great track record that we've invested with before. This is why track record's so important. You want to invest with people who are not doing this for the first time. You want to invest with people who have a tried and true track record, who've done this before successfully, and with whom you could ask for references. You want to talk to other people who have invested in their deals and see how it's going as a way of performing your own due diligence. You can ask for examples of communications that they've sent out to their investors to see how detailed or not their communications are. The next risk is that you might need your money back. That's the possibility you might need. There's the possibility that you might need to withdraw your capital before the hold period is complete. Investing in a syndication is a long-term thing. So if you, within, say, that 5 to 7 year hold, lose your job or have a parent that gets sick, or any number of unpredictable factors occur, you might need that money back. That is a very real risk that holds some people back just because of the events of the next 5 to 7 years are simply unknown. To mitigate that risk, we advise our investors to always have a reserve account, a safety net. If you're investing $50,000 and that's your last $50,000 cash, then absolutely do not invest it. Hold on to that money, save a little bit more before you invest. You always want to have a financial safety net, an emergency fund in cash in case something unexpected comes up. When you have other accounts earmarked for emergencies and upcoming events, plus your syndication investing funds, you can then invest confidently knowing you won't need to tap that money that's in an illiquid investment. You have other reserves that are purposely set aside for those purposes. The last risk that I wanted to bring up to you today is one that people often don't think about. That is the question, what if a better opportunity comes up? You might invest in a syndication today, and then next month you run across another one, either a syndication or some other kind of opportunity, and you say, dang it, I wish I'd hung on to those funds so I could put them into this investment. This is absolutely possible. There are all kinds of opportunities around every corner, and you're learning about new opportunities all the time. So are we, and this is a very real risk. To mitigate this risk, the most obvious suggestion I have is to always retain some other capital, other funds that you can invest. Don't put all your funds in one investment. Don't invest with the last cent in your pocket. Always have a little bit extra that you can put into other great opportunities when they arise. Secondly, and this is perhaps the biggest thing across the board, is to always invest on your investing goals. You should never jump into an investment flying by the seat of your pants, so to speak. You should evaluate every investment opportunity based on your personal investing goals. And if investment does align, well then go for it. If a better opportunity comes along, hey, it might not pan out or it may pan out, but you know that the money you've invested is in opportunities that align with your desired lifestyle and goals. They meet your investing goals. Overall, yes, there are risks that come with investing in a real estate syndication, just like investing in anything else. And it's very important for you to be very aware of these risks from the very beginning so that you can go in with your eyes wide open. You never want to get stuck midway through an investment and have an issue pop up. Drop a comment and tell me what risks you've incurred in your investment. What risks have you experienced before? Have you ever thought about capital preservation in a way that I've explained here? Let me know your thoughts in the comments below. Now, in the description below, you'll find a link to join the Spark Investor Club, where you'll learn more about real estate syndications and how they can help you achieve financial freedom. I'm Arn Cinedella with Spark Investment Group. Thank you so much for watching. Look forward to talking to you again real soon. Thank you.